What's up, everybody? Dropping another video. Market's been extremely volatile this week and has a lot of people very scared. I wanted to drop a video for y'all describing some strategies to help you fight through the market volatility, use it to your advantage, and help you make you some good money. Old saying, buy when there's blood on the streets. Another quote by Warren Buffett, be greedy when others are fearful, be fearful when others are greedy. Right now is a time where there's a lot of fear, and a lot of that surrounds some of the speculative trading on some worthless stocks like Gamestop and AMC and some really struggling companies. So I've had a lot of questions. What is going on with GameStop and AMC and BlackBerry and some of these companies that are having some pretty incredible short squeezes? So I want to get right into what's going on. This is a chart of GameStop. You can see, it's just been cracking up all week. So over the past 6 months, this stock's gone from $4 to a high of 366. What is happening? So GameStop's a company that's in a lot of trouble. There's nothing really good about GameStop from a fundamental perspective. They have a business model that many think are broken. The company was valued at only about 290 million very recently. So what's going on? Why is this stock going through the roof? Well, you have to understand the concept of shorting if you're going to understand how to play these mini micro-cap and nano-cap biotech stocks. And there's actually GameStop is a fantastic illustration of what shorting is, what shorting can lead to. And to understand shorting is to understand some of the success that we have in this micro and nano cap and small cap biotech game. So from GameStop's perspective, shitty company that's nearly worthless, doesn't seem to have a lot of future in the eyes of most. So these hedge funds with billions and billions of dollars are shorting the company. So what does that mean? That means that these hedge funds, these conglomerate groups with tons of cash, want to make a bet against the company. So these hedge funds started shorting the company when it was worth about $20 a share. So what they're doing is borrowing shares of the stock from the stock trading companies, Edward Jones, Merrill Lynch, E-Trade, Fidelity, whatever company is brokering these stocks. They're borrowing the shares, and they have an interest rate for the borrowing. They immediately sell the shares on the open market, and then they want to buy back these shares at a lower price and then return the shares to the company. So for instance, if a hedge fund is shorting GameStop at $20 a share, and they short 1 million shares, and those 1 million shares drop from $20 to $10, then they've made $10 per share on that short, and $10 per share on the short, so they made $10 million on that short. So shorting requires a borrowing of the shares at a higher price, a selling or quote covering end quote at a lower price, and then returning the shares to whom they've been borrowed from, and the stockbrokers owe the difference in price at the end of that transaction. So GameStop was heavily shorted, and the short shares sold short is public information. So what's happened is a lot of these groups in Reddit and Wall Street Bets that you may have heard of, they look and find companies that are extremely heavily shorted, and they get a group of people together and say, let's all work cooperatively to cause a short squeeze. So what is a short squeeze? A short squeeze is when a lot of people are buying the stock, and a lot of people are trying to cover their shorts at the same time. So a short squeeze happens when a company is heavily shorted, and then either something good fundamentally happens about the company, or more recently, these groups like Wall Street Bets cause people to cooperatively take advantage of the shorting. So these hedge funds are bullying around these companies that are failing, and they're shorting these stocks in tremendous volume, sometimes even borrowing more shares than are actually available in circulation. And these Wall Street Bets group find out that the shorts are heavily playing against the stock. So they say, let's all buy this stock at the same time, even though this company is not a quality company. And at any point in time, the share price of a stock is based on supply and demand. So the stock shares are in high demand because this cooperative group is trying to buy these shares, and also because these groups that have shorted the stock are trying to buy it back to cover their shorts, and it's causing this drastic, ridiculous, absurd inflation of the stock price that has nothing to do with the value of the company and has everything to do with the short squeeze and the covering of the shorts. So Gamestop is one that's going on right now. AMC, BlackBerry. These companies are not going up in stock price because they're great. They're going up because they were shorted in heavy volume because there's something fundamentally wrong with the company, and then all these people are working together to buy shares of the stock to really stick it to the shorters and make a lot of money based on the short squeeze, while these hedge funds are losing tremendous amount of money. This is a chart from Volkswagen in 2008. We call this the infinity squeeze. It's a famous chart because it's a vertical line that could go on for infinity. This is the greatest short squeeze of all time. The stock went from $72 to almost $1,000 in a short period of time because of a short squeeze. Read about the infinity squeeze. Really interesting bit of history in the stock market, and really enjoyable read. Same type of things going on with GameStop. I have no idea where this is going to end. Might it go to $1,000? Maybe. Might it fall back to earth at $20 in a matter of a week? I have no idea. But that's what people are playing right now with GameStop. It's pretty risky to buy at these numbers, and I'm certainly not recommending it or encouraging it. But it's really important to understand the concept. So the biotechs that I'm buying, that I've talked about in other videos, and you can hopefully understand the method by now, is these are stocks that actually have an incredibly high quality product or amazing technology that I think could be worth $1 billion, $2 billion, $10 billion in a really short amount of time. But these companies are heavily shorted to keep their price really, really low, absurdly low. And just like GameStop, the price of the company, the market cap of the company, which is now about $25 billion, that's out of touch with the reality of the quality of the company for GameStop. Their revenue and future does not reflect this type of valuation. The opposite thing is going on, in my opinion, with these small and micro cap and nano cap biotech companies. They have incredible intellectual property, and it could be worth billions of dollars in a very short amount of time, but they have been shorted, targeted for shorting by the hedge funds. These companies, kind of the opposite things going on. They have incredible intellectual property, and the valuation of the company is dirt. It's nothing. It's 10 million, 50 million, 100 million, whereas these companies may be worth multi-billions in the really short term because the incredible value of their product. They're just not quite at a point yet where they're making money, and they're heavily shorted by hedge funds, keeping their price insanely low valuations. sometimes intentionally because they want to accumulate these stocks, but these prices are being manipulated down to where their low valuation, in my opinion, is just out of touch with reality. A $40 million company going to a $2 billion company like Bionano in a heartbeat. That's the kind of vision I have for these companies. So what I want to show you today, that the market is extremely scared. It's extremely volatile. Everyone's wondering, are these speculative crazy groups that are basically just buying stocks to short squeeze and gain profits that are inconsistent with the valuation of a company like GameStop or AMC or BlackBerry? Is that just going to crash the whole market? There's a new president with a new agenda. This happens all the time whenever a new president takes office. It's well known, but there's a lot of fear on the market. And right now, these stocks, I have so many stocks on my watch list dropping 10, 15% in a day. And this is a wonderful time to buy. So a lot of people that may be jumping into the market right now, this is an incredibly volatile time, so much fear. But I want to show you how you can kind of attack some of these stocks in the short term until the market kind of settles. So as you can see, a lot of these, this is just today, some of my holdings, taking deep stabs. Yesterday was even worse. Many companies dropping by 10 to 15%. But so right now, a lot of these companies have good things going for them, but people are panic selling, or we may see a 10% or 15% or 20% gain by midday, only for that stock price to pull back to close to even because of profit taking. So I want to show you a way to kind of attack some of these stocks in the short term. So this is one of the stocks that I made a video about actually just a week ago, BLCM. And I had an average of about $3.99 on this stock. So at market close today, I'm down a little bit on this stock. This short squeeze happens. Some good news happens for the company. The shorts rush to cover. Some bunch of people rush to buy, and there's incredible, powerful upward movement of the stock in a couple hours after the stock market. And I saw it pop to 25 to 30%, and I immediately sold, taking quick profit. I've only owned this stock for about a week. It's one that I got into because it's quality. If I'm stuck with this stock for 5 years, I think I can make 50-fold. But I've got a piece of gold, in my opinion, in my hand, and the value of it grows by 20 or 30% in an instant. So I sold around 480. If I would have been a little more patient, I could have got a lot more for my share, but I made 20% in a week owning this stock. There is no shame in that. If you go back to some of the other videos, I show you, the S&P 500 is going to make 15 to 30% in a year. If you can compound any of your investments by 20% in a week, that's great money. And what do? The same principles that I've shown in a couple other videos: cost averaging and shuffling. So I'm taking a quick gain in one of these stocks, and I'm pulling up my watch list, I'm pulling up my filters, and I'm finding whatever's hit the hardest right now. I'm buying where there's blood. So I'm taking quick gains, and I'm using this to funnel those funds into something that I need to average down my cost on, or something that I think was hit the hardest today, that dropped 10-15%. So taking a quick 20%, 30%, 65%, wherever you sell in this short squeeze during the pre or after hours market, and I'm putting it right back into something that's doing really bad. And that maximizes my gains. So I did this last year in the March and April season, when every tweet that Trump made regarding coronavirus, or even before that, every tweet that Trump made regarding the trade war with China would just cause a frenzy of buying or selling on the market. And we're taking what blasts off, taking some quick profit, buying what's not doing well at the time, and we just keep cycling that over and over. And I looked back from March 1st to July 1st last year with this sort of behavior. My portfolio ended up going up about 100%. There's other times when the market's everybody's bullish and things are going well, and we're just going to let things ride, and I do very little buying and selling. But This is just a strategy that you can take advantage of during this very fearful, volatile time in the market. Alright everybody, have a great night, and hope you enjoyed the video.